Hey everybody, it's Silver Seeker, and today we're going to be talking a little bit about the current silver premiums in the market. Now, if you guys remember, on this channel about a month ago, actually, it was January 31st when I released a video, and what that video was about was APMEX, SD Bullion, and other websites like that actually pulled all of their silver off of their website on January 31st, the Saturday night, January 30th / Sunday morning, January 31st, they pulled all of their silver off their site until the markets opened up. The reason they did that is because there was a huge demand, a huge physical push, or the hashtag silver squeeze, as a lot of people have liked to call it, on silver, on physical silver, not just, paper silver and COMEX silver, but physical silver that you could actually order from websites like APMEX, SD, JM, and all of them. So all these websites with the high demand pulled all of their silver off of their site until the markets opened up because they wanted to see what the spot was going to do, and they were concerned that they were going to be selling silver at a loss if, when the markets opened up on Sunday night, that the spot price absolutely skyrocketed, and they weren't able to replace what they had sold for at least what they sold it for or less, so they can make a profit. So that is why they pulled that. I know a lot of people were arguing that they were saying they were out of silver. No, none of them actually said they were out of silver. In fact, the little messages that they put at the top of the website said that we don't have any available for sale, which doesn't mean they're sold out. It just doesn't mean it just means they don't have any they're willing to sell. But anyway, the story is that when the markets opened back up on January 31st, after the markets opened up on Sunday night, the premiums were sky high. Like, they were much, much higher than what they were before the markets closed the night before. And that's what a lot of people have been talking about / complaining about a little bit over the last, course of the month. And honestly, they haven't changed that much. So what I've done in this video is, because I was able to record a video about the premiums about a month ago, fortunately, that gives me the opportunity to go back and watch the video, see exactly what the premiums were, and then compare them to what they are today. So in today's video, we are going to compare the spot prices, or I'm sorry, the premiums, not the spot prices, but the premiums, or the amount over spot that they are selling silver for back when this happened versus what they are today, just over a month later. We're also going to look at a couple of comments from people that watch this channel and respond to those on the channel, which is also about the premiums. So we'll get into that as well. So let's get into it, guys. But really quick, before we get over there, do me a favor, guys. If you like videos like this, if you love learning about silver stacking, coin collecting, numismatics, coin roll hunting, and more, don't forget to like, subscribe, and click the bell to see my future notifications. All right, guys, so I figured really quick we would take a look at a couple of comments and I would talk about them. These actually came through recently on my most recent video about silver and the price drop, and why I'm not concerned about the price drop that much. This first one comes from Jareem Coleman. He says, online dealers rip people off with premiums. Ask what they buy silver for, and that tells you all you need to know. He has a valid point. I'm not going to argue it. I mean, a lot of these sites, they do pay for people that sell them silver for a lot less than what they sell it for. Now, of course, they do need to make a profit. But, it can be argued that, before this all happened, they were buying the silver much closer to what they were selling it for. So, silver rounds, for example, usually you could ship them off to some of these online retailers for, 50 cents back a spot, 75 cents back a spot. So you're getting less than spot, but they're only selling them for +2. And now when you ship them off, you may get a little over spot, so you'll get 50 cents over, 75 cents over, but now they're selling them for +5. So the spread is much different. I'm sure a lot of that is related to volatility, because they are worried about the market volatility. For example, if you would have sold them silver a couple of days ago when spot was 26.80 and now it's sitting at 25.34 as I look at this, they've already taken a $1.50 hit before they even got the silver, got it processed, and got it back up on their website for sale. So they are probably worried about market volatility affecting that. And then this other comment here comes from Kaiser Sos. He says, I'm so glad I didn't pay $9 whopping over spot. Now, I'll say that the only thing that ever went $9 over spot was like Silver Eagles and premium stuff. Generics never went that high, but it did go much higher. And then he says, talk about jumping in a hole. You may not care about how much you pay for silver, but I do. The U.S. is not Zimbabwe. And the reason that he said that is because in that video, I actually talked about Zimbabwe's hyperinflation and how, their dollar was about $1.50 them to $1 ours. And then 20 years later, they were printing $100 trillion bills that weren't worth anything. And that's what he's talking about. And he is absolutely right. I mean, the U.S. is not Zimbabwe, and the chance of that happening here in a much stronger and more diverse economy than what was ever over in Zimbabwe it's probably not going to happen here. But to say that there's no such thing as inflation, that inflation can't happen here, or that even, incredibly hyperinflation can't happen here, would be crazy. Now, it's not going to be that. I mean, there's a lot of trust in the US dollar across the world. There always has been. And I don't think that's going to be changing anytime soon, but the value of the dollar definitely can drop and cause inflation. And so to say that it can't happen at all, I disagree with. And then the other thing I would say to Kaiser here is that, and the reply there is actually from me, and I've just pointed out that, last year when the coronavirus pandemic hit and silver dropped, to 12, 13, 14, 15, and the premium spiked. They went up, Silver Eagles were +9. Well, if you would have bought Silver Eagles at 15 plus 9, that's only 24, which is now back of spot. So, you have to, when you're thinking about paying these premiums, and keep in mind, before I say this is not financial advice, and I'm not advocating buying into these premiums if you don't feel comfortable doing so. But what I want to say is that if you would have bought 15 plus 9 back then at 24, you'd be back of spot today. You would be back of spot today. You could sell for a profit. So you really have to think to yourself, all right, well, what do you think it's going to do? Do you think it's going to go up? Because if it's going to continue to go up, if you think the price of silver is going to get into the mid 30s, then even buying today with these premiums is better than waiting until it's 34 and then paying +5. I'd rather pay 25 plus 9 than 34 plus 4. You know what I'm saying? So that's my point. And I'm not advocating, I'm not saying that that's going to happen. But my point is when you make the decision, you have to also consider what you think silver is going to do. So, that's that's just something you have to think about. All right. So anyway, guys, I did put a couple of charts together. I went ahead and went over to APMEX, SD, JM, and I think Provident we used with the last video. Now, I know there was one that was sold out of Silver Eagles back on February 1st when I did this video. But anyway, let's take a look. Oh, sorry, wrong one. All right, so here we go. So 1 ounce silver rounds, as you can see, I have this chart put together. On February 1st of 2021, SD Bullion had silver rounds at 767 over spot. Today, as I was putting this chart together, as I'm recording this, they have silver rounds at 548 over spot. So they actually dropped their premiums by $2.19. So SD Bullion has definitely come down in their premium quite a bit. Now, I said in that video that they actually did not have, back on February 1st, not today, back on February 1st, they did not have the lowest price. Today, obviously, they do, and SD does advertise that they have the lowest price period. So it's good to see that they made that correction. And I don't even fault them for not keeping to that back then, because honestly, the volatility was all over the place. They would have had to have 5 people refreshing every site every second to see what was going on. So it would have been really hard to make sure that they hold up to that promise. And they probably corrected it that day. I don't know for sure. So APMEX was actually $6.99 on February 1st. They dropped to $5.99, so they actually dropped $1. And then Provident, and keep in mind when I looked up these prices, I looked up what was available then, and I looked up what was available, or at least on pre-order today, something that you could actually lock into price for today. Provident actually went up 18 cents. They went 565 to 583. Still puts them slightly lower than APMEX, even with the price increase, but it is what it is. It is definitely plus 18 cents more than it was back then. Okay, the next one here, guys, Silver Eagles. So this one's kind of a bigger deal as far as a price increase, as you guys can already see by my chart. So JM Bullion on the February 1st, when the markets reopened up, they were plus 1064 over spot. Now they are plus 899. Now you might notice a red asterisk next to 899. The reason the red asterisk is there is because JM Bullion is actually advertising their 2020 Silver Eagles as on sale for $8.99 over spot, which technically is cheaper than everybody else. So I guess on sale is relevant. Still a $9 premium, as the one guy referred to. So JM is plus $8.99 for 2020 Silver Eagles, putting them at $1.65 cheaper than their cheapest one back on February 1st. Now, Provident Metals, when it was $10.70 for their cheapest one on February 1st, today they're $9.59, putting them at $1.11 cheaper per round or per eagle. But APMEX, guys, APMEX actually went up from $11.99 to $13.99, and this is their cheapest Silver Eagle for BU. I'm not looking at calls or scratched up, toned ones, things like that. But for their cheapest BU Silver Eagle, they've actually went up in price to $13.99. As you can see here, APMEX, a lot of people say APMEX is the most expensive, and a lot of the times they're not wrong. They are certainly not wrong today. APMEX is $13.99 over spot. That is an absolutely sky-high premium, even compared to what the premiums are going for online versus on these other dealers. So the reason I only picked these 3 dealers and for silver rounds, the other 3 dealers, is because I only had the data from February 1st for the ones that I did the video on, so I had to go with the ones I had the data on back then so I could compare it. If you guys want to see that video, I will put a link down in the description below. Now I have one more comment that I want to respond to here, and it's actually also off the same video. It's from James Madison, and he goes, LOL, the price never went down if you own physical with these insane premiums. Big difference between paper and physical market. And that's exactly what, I was talking about earlier in other videos, and in that video right there, is that there is a huge difference between the physical and the paper market, and the demand for physical silver is still very high right now. Now, I'm not sure if it's as high as it was a month ago on February 1st, but there are still a lot of these websites that are talking 3 to 5 to even 2 week long delays, depending on the site and depending on what you order. A lot of the products that they have on their websites, even some of the ones we referenced in this video, are actually on pre-order status. I used the price because you could pre-order them at that price. They weren't available for immediate delivery though. So something to keep in mind as well is that the physical premiums are up because the physical demand is still up. Again, I'm not advocating buying into these premiums. I'm not advocating that at all. You have to make that choice. You have to decide what you think silver is going to do in the future. Again, I've said in other videos, I'm a long holder. I will never change that. I read articles on Kitco from, Kitco actual analysts that, it's like, 2 months ago, they were really long on silver, and today they're like, sell. And no. If silver goes down to 12, I'm just going to buy more. If silver goes up to 50, I might sell a little bit, but I won't sell my entire hoard. If you want to call it that. I mean, my entire stack of silver, I'm not going to sell it, but, I will sell some of it and then hopefully be able to replace that when it goes back down. But even if silver hit 100, I would not sell all of my silver. There's no way, because I believe in silver much more than I believe in fiat currency. So anyway, guys, there you go. That's what I had to say for this. I hope that you enjoyed the video, learned a little bit, or at least appreciate the opinion that I gave you guys today. Thank you so much for watching. Like I said, if you did enjoy this video, do me a favor, don't forget, again, to like, subscribe, and then click my bell so you don't miss my future video notifications. Hey guys, thank you so much for watching. I hope you enjoyed the video. I did leave a video above. You can check out if you haven't seen it yet. I also want to give a huge shout out and a huge thank you to my awesome channel supporters scrolling right there on the right hand of the screen. Thank you so much for watching, and we will see you in the next one.